us now for more is the Chief Economist of UnionBank Philippines, Carlo Asuncion. So good to see you, Carlo. Welcome to the program.
Yes, thank you for the invite.
Yeah, 7 months into what's been a volatile year for risk appetites because of the global policy uncertainties and most recently the Mideast escalations. Just how attractive is the Philippines as an investment destination relative to our ASEAN neighbors?
Well, I think it's holding up. No, it's still an attractive destination for foreign investments if inflation is kept low and the BSP continues its easing stance. That's we're in a great place for just keeping that excitement for foreign investors to come in and take advantage of opportunities here.
Is it all inflation then? I mean, you've said that if inflation becomes, stays benign, then that is what puts us up against the ASEAN neighbors, gives us a bit of an edge there?
Yeah, I think it's because, in the past, this post-pandemic era, we've been hounded a lot by prices, the increase in prices. Nobody expected that. That's going to come in 2023, just elevated inflation. And now that inflation has seemingly, has gone down, and then I think that's one important thing that investors are looking at, just to make sure that, of course, their investments are protected, and which one they could choose. So I think that's a very important aspect of decision making.
Your inflation estimate for June is at 1.5%. So that puts you smack in the middle of the Bangko Sentral's forecast range of between 1.1 to 1.9% and towards the upper end, in fact, the median of the Business World poll of 17 analysts that we're seeing there. And you're marked in red. That's where you're at when we talk about the Business World poll. How did you come up with 1.5%?
Yeah, we looked at, of course, data. The food price situation, or the uptick is because of the temporary rebound in fuel prices and certain mild increases in non-rice food items, and that includes utilities as well. So, but despite this uptick that we see, it remains below the BSP's target of 2 to 4%, and we actually see inflation to gradually rise, by 2% this September, and end the year at around 2.5%, and that's still within manageable levels. So we end at an average for 2025 at around 2% for inflation.
But 1.5% doesn't factor the 50 peso wage hike. Announced 24 hours ago, taking effect on July 17th. Might it make a big difference in your inflation estimates?
Well, it's going to take effect, I think, July, this month. No? So that has to be factored in. But maybe versus 100 to 200 pesos, I think that's 50 pesos is a huge difference from that huge uptick that was originally proposed from Congress. So I think that the 50 pesos that actually includes upticks in wages in certain areas, not entirely the Philippines, and that would be, I think, manageable impact.
Okay, so given the inflation picture or the lack thereof, how many more rate cuts do you think the Bangko Sentral will make this year?
It's still within, including the statement of Powell yesterday or overnight. It's still within our expectations that by August the BSP will hold and just be able to determine and see how has been the impact of the rate cuts that they've done in the 2 rate cuts that they've done this year, and then push through most probably in October with another 25 basis points cut.
But just overnight, he wasn't really ruling out on a rate cut, possibly in the next meeting, which is July 29. 30 because he wanted to watch the data, and in particular, the jobs report this Thursday, and in 2 weeks, the inflation report. So what are the chances that he might make a move?
Well, if he does make a move, it's still within our expectations because we did already two this year. So in terms of interest rate differential, that works well. It still works out well, no? So I think holding in August is still something that's allowable, I would say, that the BSP would still consider and do pull the trigger by October.
So the Bangko Sentral does have that leeway. I mean, whether Powell moves or not this month, the Bangko Sentral will make a move in August.
Well, yeah, we think that they at this point, right, with all of the information, we think that they will consider a hold.
Okay, so in what way will these rate cuts then lift growth here in the Philippines? The government last week cut back on its growth goals to between 5.5% and 6.5% from 6 to 8%.
Yeah, well, we're looking at least the first cut of our knockcast exercise, 4.6% to about 5% for the second quarter. That's still within our expectations for the year because we are expecting a growth of 5.3% for the whole year, 2025. No, so even with the cutback, we've already taken that into account. We're actually in line with other multilaterals, actually even earlier than them, with our expected growth for 2025.
So just going back to my first question then, relative to the ASEAN neighbors, we're still ahead of the pack, you think?
I think so. I mean, even with those challenges externally, we are still better positioned to be like a great destination versus others.
Just as a final point, it's been dollar weakness all throughout these 7 months. Where do you see the peso headed?
We still think that it's going to be at around 55 to 57. No, that's where it's going to be a range for the rest of the year.
All right, there goes the crystal ball. Thank you so much. Cardo Asuncion of Union Bank. Appreciate the insights.